Hello everybody, Jackson here at the Wealth Squad. Today we'll be talking about the quick ratio and PEG ratio because those are the last two videos I made talking about these specific ratios and helping you find the perfect stock, which is impossible. We have to find something close to that, right? So that's all we gotta do. So using finviz.com, I'm using the PEG and quick ratio. Quick ratio over 1 basically states that the company has enough cash, more than enough, to pay its short-term debt or cash equivalents. And then the PEG ratio measures the price, the earnings, and the growth of that earnings, and basically gives it a ratio. So out of that PE ratio over the 5-year growth, a 1 is considered fair, and under 1 is considered, well, you're getting a better bang for your buck, and over 1 is considered overvalued. So it's inverse. Over 1 is better for quick ratio, under 1 is better for the PEG. Using that plus, I'll use this so we can narrow down our options even further. On Finviz, we could find a couple of stocks, 243, so quite a bit that we could pick through. Starting off, we have Chevron, as well as ConocoPhillips and Occidental Petroleum. These stocks are kind of hard because they are very, very cyclical, meaning the business goes up and down and varies year to year. So with oil being super, super hot right now, or I guess, beginning of last month, it was super, super hot. It's kind of hard to give a definite answer as to if you should buy into this one or not. So I would avoid oil stocks for the time being. Lots of uncertainty around oil. But we do have Qualcomm and AMD. They do look like not terrible value right now, especially since these are growth stocks. And we have these narrow options that only 243 stocks has ever or are presently going through right now. So AMD, Qualcomm, we also have Applied Materials, same type of sector. You can see here, obviously technology industry is different, but with Micron it is the same. Also semiconductors, this is just semiconductor equipment materials, I'll count that as the same. Same with KLA Corporation. Then we have Warner Brothers Discovery. They must have put that name in with Discovery. That's at $14. That's being down quite a bit. And then also Ford, but I skipped over that as well. Another very cyclical brand that I try to avoid. With Warner Brothers, then we have Ross Stores. I don't know. I don't really like clothing stores, especially physical, so I'm going to avoid that just from the start. On Semiconductor Corp, Align Tech, Liberty Broadband, but Align Tech is something to look into. You can see that stock just from this chart from March to now has gone from 450 to 250, and I'm sure it's gone down more than that over the last year or so. So just in the 20 picks, we have 1, 2, 3, 4, 5, 6, 7, 8 stocks to look into, because just from the start, I don't deal with cyclical companies, cyclical businesses, Basic Materials being one of those, as well as steel. I mean, of course, which it is steel, as well as oil, just because those are based around commodities, and you don't have much edge in a business of commodities unless you have the super, super premium service, which is very hard to see behind numbers. But with Ross Stores, that is something that's just my personal preference. I don't see clothing stores, especially physical ones, doing any better than what they've done in the past. But there is a time and price for everything, right? If Ross Stores jump to 40 tomorrow, fell to 40 tomorrow, then I look into it. It's a value play. It doesn't matter much the business, but rather the numbers back in that business. But with these technology stocks, that's something to definitely look into. With the cyclical companies within energy and Basic Materials, that's based around commodities, which they do not have much pricing power over. And we look at the second page, we can see some more of the same. I haven't heard of this one before, so I'll look into this one. PerkinElmer, VF Corp, I've looked into. International Paper, that is sort of a commodity, but we could also look into that one. Western Digital, I've looked into before. Then we have Qorvo, interesting one, $10 billion. WestRock, I've looked into. Etsy, of course, was a very high flying growth stock, now fallen quite a bit. Vail Resorts, a very nice, interesting stock based around ski resorts. Then News Corp, sometimes these stocks, maybe they're in the TV business. Well, we all know that's not doing very well, but it could be a value play at that price if it's being down enough, just like Ross Stores. If it falls to 40, it's a value play. It doesn't matter if it's a clothing brand or they sell radios, right? It just matters on, do they have enough cash in the bank to survive? How long does the current investors think it's going to survive? How long do I think it is? And we could go from there, just based on the cash position and how much they're burning, how much they're going through. BorgWarner, that's auto parts. Then we also have Mattel and Lear. So a lot of these I haven't heard of, but of the other page I did hear of most of them. And it's just interesting based on these two rigorous, I will say that, because these are hard ratios to come by. A PEG under 1 in this market, even after the fall, is hard to come by, and a quick ratio, meaning they have enough cash to survive the next short-term payments, which is around 3 months, without having to go into any more debt, is pretty good as well. So just because your stock potentially did not make it through these, does it not mean it's bad, right? We've looked, if you check out the PEG ratio video, it does talk about like that future earnings, and that's not very priced into the current PEG ratio, which is not something you should take like we're taking it now. This is just an example of what you can do, and furthermore look into it, right? You could always click on this and say, hey, is this PEG ratio getting better or worse? Getting better, then you could look at the price as more of a discount, right? Because the future earnings are growing. So I hope you take this into consideration when finding your next investments. Good luck to you. These are just some simple ways to find some quality companies that can help you grow your wealth in the long run. Thanks for watching.